We now start to understand where many feel value actually lies.
We are, and when you look at it, we have the loan book that is worth more than $70 billion, so it's quite large. The question is, will Apollo, KKR, Blackstone, will they start to bid on parts of it or all of it? More likely, you'll see them bid on parts of it, because the idea here, and this is great analysis by Bloomberg Intelligence as well here, this is a loan book that has not lost a lot of money. There's a lot of questions and concerns about the quality of the loans underpinning, given that Silicon Valley Bank was so aggressive in courting Silicon Valley and the tech entrepreneurs and sometimes unprofitable companies. But the idea here is Apollo, KKR, Blackstone, they're experts here. They're credit experts. So the idea is that if they take on these loan books, they take on these clients, and they feel that they could do a better job at managing these loans. But with that said, there are other assets as well, including the venture arm, the asset manager, if you will, and the investment bank that worked on about $9 billion worth of deals last year alone.
And what's so interesting is we still to try and think about where the value is, as Sonali outlines. Sonali, we were just talking to Mel over at We Family Offices, and she was talking about board oversight and the need for that at the moment. Ed, there's real due diligence going in on what executives were and were not doing at this time.
Yeah, look, the FDIC came in and appointed new leadership at Silicon Valley Bank, but inevitably, Sonali, there is a post-mortem going on what happened and the action that executives took. What have we reported in the last hour?
There are a few things to keep an eye on here, Ed, and that is both the investigation that is happening when it comes to Silicon Valley Bank, its executives, the actions taken before. There are so many critics in the market that say, listen, some of these issues we have known about when it comes to their balance sheet management. But even beyond that, the stock sales from the managers, particularly the CEO, Greg Becker, leading into a lot of the disclosures of the information that we had seen before the collapse of Silicon Valley Bank. In addition to that, I would also note, remember, while you have the DOJ and the SEC forming investigations around the collapse of Silicon Valley Bank and the management of it, you also have the Federal Reserve doing its own investigation of how itself has handled the situation. So really questions all around the board here.
The reason we're tracking both threads of the story is even 24 hours ago, we had a key venture capitalist on this program saying we want Silicon Valley Bank to survive in some form, because we've always done business with them and we want to continue, Caro, to do business with them.
And I think also people juxtaposing the decisions that were made in the US with the regulators versus the UK. UK very swiftly getting a buyer. I mean, at a very rock bottom price, it has to be said. I mean, £1 for SVB UK, Sonali. But what have you made of the differences there?
Huge differences. And remember, it is a smaller arm when you're looking at the UK arm. There's been a lot of questions. On Friday morning, when we all woke up, there was a question about half of Wall Street circling these assets. If you take a look, to the point that Ed had made, there has been drips and drabs of plans announced on restructuring, but there has been no bankruptcy filing. That's an important differentiation here, because had there been one, then it would be up to kind of the jurisdiction of a judge in that sort of a situation. But now that you have these assets slowly coming up for sale, it makes it a little easier for different parts of Wall Street to absorb these things, particularly in a way that's compliant with regulations and could help them avoid a lot of the 2008 era liabilities that cost firms like JP Morgan a lot of money coming out of the post-2008 investigations.
Wall Street is debating moral hazard, as we've been discussing on air all day. Just very quickly, Sonali, how do the banks look this Tuesday? I mean, there's still concern about the sector, right?
There's certainly still concern about the sector, but there was a lot of acknowledgement that Silicon Valley Bank was an outlier in terms of the way that its deposit base looked and the way they managed their assets. And we have to look at other sectors now also as we weigh the lagged impact of interest rates. Commercial real estate, that is maybe not as front and center and emotional as Silicon Valley Bank is, but certainly it's a slower bleeding problem. And so we are certainly not out of the woods, though it is a big relief to the market to see the regional bank stops hop back up, particularly with the likes of a First Republic and some of the banks on the West Coast like Western Alliance and PacWest that some of the market was concerned about yesterday.